Problem 8A-4. In this problem, we're going to do the Form 941, the quarterly form for calculating your FICA OSTI, FICA Medicare, and the FIT that the company owes to the government. Don't forget there's an instructor tip here. And the first thing I wanted to tell you, this is something that's a little bit different. It says, note for this problem, YTD, year-to-date earnings. For this problem, it means this period's wages plus the wages prior to this pay period. So let's open up this table. So this year-to-date earnings here means that Pam has made $95,850, including this month's earnings. So that is what that is all about. And then when we get to the Form 941, if line 7A is 0 cents, do place a 0 on line 7A and 7H. So if you forget where this instructor tip is located, it's at here under question help, and then view instructor tip. So the following is a monthly payroll for the last 3 months of the year for Hinson Sporting Goods Shop. And it gives you the address for filling out the 941. The shop is a sole proprietorship owned and operated by Bill Hinson. The employer ID number for the Hinson Sporting Goods is 28-9311A93. So again, that's for filling out the Form 941. So here's the payroll information. These people are paid monthly. That's just to make this problem a little bit simpler. So we've got 3 months of pay activity. We've got October, November. We scroll down, and then we have December. And we've got 3 employees, Pam Adams, Jim Lee, and then Dave Oswald. Let's see what else we got here. The employees at Hinson are paid once each month on the last day of the month. Pam Adams is the only employee who has contributed the maximum into Social Security. Now, none of the other employees will reach the Social Security wage base limit by the end of the year. I mean, you can just tell that by scrolling down to December. So here's December. Remember, the year-to-date earnings means the prior earnings, like this $98,880, plus this month's earnings of $42.50, puts Pam Adams over the wage base for OSTI. So when we're calculating taxable OSTI, we're going to have to remember that. And then assume the rate for Social Security is 6.2%, wage base of $102,000, and the rate for Medicare is 1.45% on all earnings. Hinson's is classified as a monthly depositor for the Form 941 payroll tax deposit. And if you need to look at the blank Form 941, the whole thing, here you go. Now on Canvas, I also have posted for you, it's called the Form 941 with annotations. So if you're trying to figure out what line does what, oops, sorry about that. Let me make this a little bit bigger. For example, if you're wondering what goes in line 2, it's gross wages. Line 3 is FIT, that was withheld from the employees. And then here's the one that's tricky. For 5A, it's taxable Social Security. So don't forget, these are wages taxable for OSTI. And we've got that one employee that goes over the limit. So this is not going to be equal to the gross wages. Anyway, so we're not going to do the 941 at the beginning of the problem. That's for the later. So step 1, record the employer's payroll tax expense for October 31st. So we're just going to record the employer taxes. Now, this problem is just for the 941, so we're going to ignore FUTA and SUTA. So the payroll taxes that the employer pays Remember, we have to start with payroll tax expense. So the payroll taxes are OSTI. So we've got OSTI payable. Then we've got Medicare. So we need Medicare payable. And then we've got FIT, federal income tax. So we got FIT payable. Withholdings. Okay. Now again, some of you might be thinking, well, what about FUTA and SUTA? We should be recording FUTA and SUTA also. However, this problem is ignoring that just to make this problem a little bit easier, because this problem is only for Form 941. And what's the 941 for? It's for FICA, FICA, FIT. And I've already screwed up. Only the employees pay FIT. So we just need to calculate and record the OSTI and the Medicare. And again, FUTA and SUTA are just going to be ignored. So let's go back to our wage base, not our wage base, our data table. We're going to scroll up. Notice this is for October. So we're going to look at the October. And then, so the employee's OSTI is right here, the total. So the employer has to match that. So we're just going to copy and paste that. OSTI payable is going to be 628.68. And the Medicare payable, the employer matches what the employees had to pay. So it's going to be 147.04. Payroll tax expense, we're just going to add those two up, and we get 775.72. Let me find my check answer button. And then we continue. And now we're moving on to November. So here's November, tells us what we're doing. We got payroll tax expense. Now don't choose as payroll expense. There is no such thing. It's payroll tax expense. And then we've got OSTI payable. And we've got Medicare payable. So for November, OSTI, we got 660.3. We're going to match that as the employer. For Medicare, the employees paid a total 154.44. The employer will match that. And then for the payroll tax expense, we're just going to add those two up. And we get 814.72. Well, that's not right. Obviously, I cannot add 814.74. And we're going to continue and then scroll down. We're now working on December. It says December over here. So we have the same three. We've got payroll tax expense. We have to record the employer's matching part of OSTI and the employer's matching part of Medicare. So OSTI 701.84. Medicare 180.53. Add those two up, and we get, what, 882.37. And then we click on Continue. And now it says, journalize the payment of each tax liability. So now we're going to pay, first it says, notice it says November 15th. Remember, this company is a monthly depositor, so if we're depositing on November 15th, it's for the previous month. So October's tax liability. So we have to pay the employer, we being the employer. We have to pay OSTI, so the OSTI payable is going to go away. And then how much is the OSTI payable? Well, the employees, excuse me, let's scroll up here. The employees paid 628.68, and we recorded that for ourselves up here, 628.68. So we're going to double that. Where did my calculator go? Help me. Calculator, come back. There we go. All right. So we need the wage base table, excuse me, the data table. So the employees paid 628.68, and we're going to pay that, we being the employer, 628.68. So the amount the employer has to give to the federal government is the employee portion and then the employer portion. So we're going to double that, 1257.36. And then we have to pay Medicare. So Medicare, the employees paid $147.04. And then the employer also paid that, so we're going to double that, $294.08. And again, why are we debiting a payable? Because we're getting rid of the payable. How does the payable go down? A liability goes down with a debit. And then the last thing we need to pay is the FIT payable. And the FIT payable for October is $14.93. And since we, the employer, are paying this, cash is going to go down. And we add those three up, and we should get $3,044.44. Check our answer. Well done. Continue. Now we're going to journalize the November's payment. And that, of course, happens in the next month on December 15th. So let's go back to our table. So November, we have OSTI we have to pay. And the OSTI is going to be 660.3. We're going to have to double that. 660.3 times 2 gives us 1320.6. And then we've got our Medicare we have to pay. So we have to pay the employee portion, 154.44, and then we're going to match that. So we're going to double it, 154.44 times 2 gives us 308.88. And then for the November FIT, we've got 1624. Copy and paste that. FIT payable goes away. And then so does our cash. Add these three up because debits have to equal credits. And the cash payment that we made is 3253.48. Okay, and then we click continue. And then we've got December tax liabilities, which will be paid in January. So let's scroll down to December. For OSTI, we've got 701.84. We need to double that. 701.84 times 2, 1403.68. Then we have to pay the Medicare, which was 180.53. I wonder if I can copy that into the calculator. I bet you I cannot. Nope. So we got what? 180.53, 180.53. That's the employee portion. We're going to multiply that 2 because we have to match that as the employer, 361.06. And then we have to give the FIT payable to the government, 2050. Now you may be wondering, why are we doing these 3 taxes all at once? Well, the 941 is a federal form, so these are the federal taxes that are going to be paid directly to the federal government, and they all need to be paid at the same time. So all 3 of them are going to be recorded at the same time. So we have cash going down, and then that total looks like it's 3814.74. Nice work. All right. Now we're going to fill out the 941. So remember, on Canvas, you've got this annotation, which is kind of helping you figure out what goes where. Okay. And wages, line 2, wages, tips, and other compensation, that's just our gross wages. But before we get there, we've got the number of employees. How many employees did we have? We had Pam, Jim, and Oswald. So that's 3. So we're going to put 3 there. Check our answer. Now, line 2, wages, tips, and other compensation. So here's how we find out our wages, tips, and other compensation. So we start with October. So we got 10,140. Monthly earnings is wages, tips. So we've got 10,140. 10,140 plus we got the 10,650 plus, that was for November, and now for December we got 12,450. Gives us 33,240. So that's gross wages. Now comes, well, this is easy too. It's not the hard part yet. So FIT, total income taxes withheld from wages, tips, and other compensation. So just a reminder, the annotated guide that I gave you, FIT, that was withheld from employees, goes in box 3. So how do we calculate FIT? You just go back to the table, scroll up, clear our calculator. We've got 1493 plus 1624 plus 2050, 2050 equals 5167. All right, now it's where we're getting a little tricky. Line 4, if no wages, tips, or other compensation are subject to Social Security and Medicare tax, check that box. It's rare that there are wages that is not subject to Social Security, Medicare, and this problem does not get into those, so we're just going to assume that all of this is taxable, except for those that went over the wage base. So now, here's the tricky part. Taxable Social Security wages. So we have to go back to the table and see how much is taxable for OSTI. In other words, has anyone gone over the limit? Remember, this year-to-date earnings is the previous earnings plus the current earnings. So if these are not over 102,000, then all of this is taxable. So in October, the taxable amount for OSTI is 10,140. Again, why? Because no one over here is over the limit. So what I'm going to do in Excel, and I've got this solution posted to Canvas, what I need to do is I need to have a table, taxable OSTI by month. Okay, so we just found out that in October, 10,140, in other words, all of the wages are taxable for OSTI. Now let's look at November. Is all of the 10,650 taxable? We have to look. Is anyone over the 102,000 limit? No. No one's over the 102,000 limit. So all of it is taxable. So I'm going to go back to my spreadsheet. And for November, I've got all of it taxable, 10,650. Let's go back to our table. Let's look at December. Is anyone over the 102,000 limit? So remember, once again, this year-to-date earnings means the prior earnings. For Pam, it's 98,800 plus 4,250 equals this. If you don't believe me, you can calculate it. So we got the previous earnings, 98,880, 98,880, plus her current earnings, 4,250, gives us this 103,130. So Pam is over the limit. So we need to create a separate table for December to see how much of these employees is taxable. So let me get back to Excel, which again is on Canvas. I am going to create a December, don't do that. I'm going to create a December, or I have created, a December taxable earnings for OSTI. So here's the monthly earnings. So we got 4,250, 3,800, and 4,400. Where did I get that from? It's just from this table right here, 4,250, 3,800, and 4,400. And then I'm looking to see how much of that is taxable. Well, let's start with the easy people. Dave, his year-to-date earnings, which includes this period's earnings plus the prior, he's not over the $102,000 limit. So all of his 4,400 is taxable for OSTI. Let's do Jim. Jim is nowhere close to being over the limit. So all of his 3,800 is going to go in this taxable column. Notice this says taxable OSTI. Okay. Now, here comes that pesky Pam Adams. Pesky because she's gone over that limit. So we have to figure out how much of this 4,250 is taxable for OSTI. So remember your favorite chart where we have the 102,000 limit. So what this chart is showing Pam's taxable OSTI. So remember, here's the 102,000 limit for OSTI. Everything below it is taxable. This part in blue, 98,880, is her prior. Notice it says Pam's wages prior to this paycheck. They have already been taxed for OSTI. All right. So where did I get that from? If we scroll up, it came from the November year-to-date earnings right here. So that represents this blue area, 98,880. Now this green area is her current paycheck, the 4,250. Where did that come from? It comes from December's monthly earnings. So this green is her this green is her gross wages for this period. So which of this paycheck, now notice this paycheck puts her over the 102,000 limit. So which part of this is taxable? The part above or the part below 102,000? It's the part below 102,000. So how do we calculate how much of this is her paycheck? You take the 102,000 limit, which is right here, and we subtract the previous earnings she's made, 98,880. So here's the calculation over here in red. 102,000 wage base, subtract what she's made prior to this. So of this paycheck, this is 3,120. That's taxable for OSTI. So we need to scroll down here to see where I put it in my December taxable OSTI table. So here is Pam's $31.20 taxable for Aussie. So how much is taxable total for December? $11,320. Then we bring that down here and add it to the October, November, and December. And this, remember, the $11,320 represents what was taxable in December for Aussie. So that was a lot of work to figure out that in that quarter of October, November, December, the amount that's taxable is $32,110. So I'm going to scroll down. We're going to put the $32,110 in line 5A, column 1. That's taxable Aussie. 5A, column 1. I already forgot what the number was. What was it? It was 32,110. Should have just copied it. All right. And now we're going to multiply that by 0.124. In other words, 12.4%. Why is Social Security being taxed at 12.4? I thought it was 6.2. Well, what this form is doing is it's calculating both the employee and the employer portion all at once. So I'm going to clear this. I'm going to enter 32,110 times 0.124 gives me 3981.64. So that is the Social Security Aussie tax that the employer needs to pay. In other words, this form has calculated that this is the actual amount they owed. Whether they paid that or not exactly depends. It's probably going to be off by a few cents due to rounding. Now, taxable Social Security. Nobody in this problem gets paid tips, so we're going to skip that. Now we got taxable Medicare. So this problem says Medicare has no wage base. It's subject to all earnings. So what was the gross wages? We already calculated it. $33,240. It's going to paste that here. And we're going to multiply it by 0.029, which is 1.45% times 2. So in other words, this form is calculating the employee portion and the employer portion all at once. So I'm going to clear this. 33,240 times 0.029. Oh, I forgot to clear it. 33,240 times 0.029 gives us $963.96. So the hardest part of this problem is right here, figuring out how much is taxable for Aussie. Now, line 5D, it tells you, it says it's the total Social Security and Medicare taxes, which is this number plus this number. But if you didn't know that, it tells you what to add. It says columns 2, which is this column, lines 5A, 5B, 5C. So we're going to add those two up, 3981.64 plus 963.96. Isn't this exciting watching me add? Gives you 4945.6. Line 6, total taxes before adjustments. Lines 3, which is FIT, plus Social Security and Medicare. Line 5D. So remember, it tells you exactly what to add here. So I'm going to add this, plus I'm going to add this. I'm not going to bore you by having you watch me add it, but it is 10,000. Put in the optional comma, 112.60. So what this number means is, this number we just calculated, it means that this form is telling us this is what the employer needs to pay total for FICA, FICA FIT, FICA Aussie, FICA Medicare, and then FIT. So now This is also a tricky part of the form. It says tax adjustments. So let's get back to the 941. Let's scroll down here to line 11. Line 11, let me see if I can make this a little bigger for you. Line 11 says total deposits for this quarter. All right, so what this line 11 is how much did we actually pay into FICA FIT. So line 11, which we can't scroll down to on this form, but you can see the whole form here. Line 11 is the total deposits. So what we need to do before we can do this line 7A is we need to figure out line 11, which is how much we actually paid, and compare it to line 6, which is how much we owe. So again, line 6 is how much we owe. And over here, the annotated version tells you line 6 is the total FICA, so ASTI, Medicare, and FIT that the company owes, and then line 11 is how much you actually paid. Now, you're probably going to be a few cents different due to rounding, and then the difference goes here in line 7A. So to figure out how much we actually paid, we need to scroll up. And we're going to look for those 3 cash transactions. Here's cash, here's cash, and here's cash. So that's how much FICA, ASTI, FICA, Medicare, and then FIT we paid. So let me scroll up to the first cash amount. So we got $3,044.44 plus a $3253.48 plus, scroll down, $38.14. $38.14. Oh, I hope it doesn't make me start over. $38.14.74. 10,112.66. So here's what's going on now. So what this 10,112.66 represents is those 3 cash amounts on how much we paid. So let me scroll down here. So line 11, which again is total deposits. So in other words, how much we paid. We're going to compare that to line 6, which is how much we technically owe. They should be very, very close. And then line 7A, where it says current quarter's fractions of cents. They call this fractions of cents because of rounding. There's going to be probably a difference. So how much difference is there between what we owe, 10,112.6, and what we paid, 10,112.66? It's 0.06. It's 6 cents difference. Okay, for these other ones, we're going to skip them. This problem does not have to do anything with sick pay, adjustments for tips and group term life insurance, etc. So we're going to have all these other ones be blank. We go down here to line 7H, total adjustments. It says combine all amounts A through G. So this is just going to be the same as line 7A, 6 cents. Now we're almost done. Line 8, it says combines line 6, which is what we owe, with line 7H, which is those fractions of cents, and put it here, 10,112.66. Line 9, advanced earned income credit. We don't have anything in the problem about that, so we're going to skip it. Total taxes after adjustments, line 8 minus line 9. Line 8 minus nothing gives us the same number. And then line 11, which we already calculated over here, those 3 cash payments, goes in line 11, how much we paid. So balance due, it says if line 10 is more than a line 11, write the difference here. Well, they're the same. And then the overpayment, if we overpaid, we would put the difference here. And it says if line 11 is more than line 10, put it here. Well, everything turns out okay. Everything's the same, so we click on check answer. So that's it. That's the problem. So what's going on here is the government knows that due to rounding, there's probably going to be a few cents difference, and we owe 10112.6. We actually paid in 10112.66, and then the fractions of cents doesn't really matter. And that's it.